Thanks so much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour, plunging Microsoft. The stock suffering its worst day in some 6 years. We're trading that and the rest of tech with the investment committee. And joining me for the hour today, Josh Brown, Jim Lebenthal, Malcolm Etheridge, and Rob Sechin. Let's take you to the markets. It is a tech and NASDAQ story today, down about 2%. So we're obviously watching the dramatic moves that we continue to see in metals and copper and gold and silver, and we will get to all of that. However, Microsoft, as we said, on pace for its worst day since March 2020. That is when it was down 14%. We will track it throughout this day to see if it eclipses that. Why is this happening? Well, earnings season for the mega caps was all about the spend versus revenue growth, right? Strong revenue growth shows that you get the ROI on the spend that everybody's clamoring for. Microsoft had a higher than expected spend. The problem is they had a slower than expected cloud revenue growth. And Malcolm, that seems to be the issue in the market today. Jim, Malcolm, Rob own that stock. What do you make of the report? What do you make of the price action and what you should do now?
I knew you were going to come to me first.
Yeah. Yeah.
So I was on with you yesterday, closing bell, and my focus was entirely on Microsoft figuring out a way to signal to the street. This is their first opportunity since the restructuring of the deal with OpenAI to say something, to tell a story that lets us know just how little they rely now on that relationship with OpenAI. They had taken steps in November, built a new partnership with Anthropic, the direct competitor of OpenAI. All seemed to be going well. And then all of a sudden, to your point, at the same time, CapEx is going up, revenue has come down, even if ever so slightly. And that was just enough for the street to say, thanks, but no thanks. Separately from that, though, I think what also needs to be part of the story is the additional $200 billion worth of RPOs that came into the conversation later on are from OpenAI. So just as I was saying, it's time to start talking about how you're better off without them following the separation. Here we go. We're even more reliant. And I think both of those things taken together, the street just said, enough's enough.
What's your take?
This, to me, seems well overblown. If we measure it by market cap, Microsoft has lost about $400 billion of market cap today. And why is that? That's because Azure, at least in part because Azure disappointed by about 1 to 2 percentage points relative to what was expected. Now, the expectations, they said 39.5% growth, but the whisper numbers were more above 40, 41%, came in around 38%. So we're going to take $400 billion of market cap off of Microsoft because the Azure revenue growth was 38%. And some of that disappointment came from supply constraints. We know that they can't get as many GPUs as they want. They're trying to parcel these out between the Copilot business and Azure. Again, I put this all together. I use those numbers specifically to say this seems overblown to me.
I mean, I think you oversimplify it a little bit. It's suggesting that the stock is only down because revenue growth for Azure was just down slightly. You miss the fact that spending was greater than expected. And how can you have one versus the other and not have a reaction like you're having now? We've been talking nonstop about the tremendous spend that these companies have and the return on investment that they are going to see. So if your spend is increasing and your revenue growth is decreasing in terms of where the estimates are or not meeting what the estimates are, therein lies the rub.
Yeah, I mentioned Azure specifically because I was thinking about what you said, Scott, about return on investment, ROI, and we need to see it. We didn't see what the street was looking for in terms of the whisper number in terms of Azure growth. But again, to me, what I'm looking at here is there's a supply constraint issue going on here. Supply constraints have happened many times over the last 3.5 years since AI became, a thing. They will happen from time to time, and then they work themselves out. And I think once they do, that ROI will pick back up. But I do want to use these numbers again. 38% year-over-year growth in Azure revenue. I find it hard to say that I'm disappointed, even if the street wanted 40, 41%.
But I think, Jim, the reason that that's not good enough is simply because people like me have been making the argument for some time now that the thing that really matters to the Microsoft story right now is Azure cloud credits and their ability to sell those, regardless of whether they can monetize Copilot or any of the other enterprise tools that are AI-based, and that buys them some runway. With Azure growth stalling or slowing, that tears that thesis up, and it says that we need to show a way to monetize that AI spend sooner than later.
Down 12% today, and with the stock now trading in the mid to low 20s on a forward multiple, depending on whose earnings estimates you use. I'm going to say to you that your point is well made, but because I think it's temporary and it's generated by supply constraints, that this is overdone. It will take some time. I'm not rushing out to add to my Microsoft today, but I think by the time we're in the summer and these supply constraints have eased, you're going to see this snap back. This is just overdone.
So, Rob, Morgan Stanley removes it as its top pick. It still likes it. It's firmly overweight, it says, but it is no longer a top pick. Bernstein says solid quarter and guide, but not good enough. To Malcolm's point, Trim's target to 641 from 645. Yes, they are still outperform. But what's your take? Because you own the stock too.
We own the stock big. I don't think we can change that. We've been in the name for a very long time.
You want to change that?
No. I think we could trim it at the margin. We have not. We've chosen not to do that. I think our view more aligns with what Jim's saying. There's no doubt that there was some tactical pressure on the name, and that just shows you that when you disappoint, even at the margin, even though everything else was solid, the room for disappointment is about this big. And can you monetize AI? That's another question for some other names. Some are showing that they can. Others are showing that they can't yet. It doesn't mean they never will. You're seeing all the SaaS businesses, getting killed in the last several days.
Yeah, we'll get to those coming up too. We will.
Right. But the reality of it is with Microsoft, we're going to stay a holder. We tend to be in Jim's camp. We're a little worried near term, but we're not jettisoning the position. They have consistently benefited from their role in the ecosystem, which is not only great endemic across every business, but continues to expand, whether that's expanding at a rapid pace like Azure, or it's expanding at a slower pace like some of the other businesses they're in.
You have a real knack, I think, at taking a big picture view and assessing what certain things and price action means to you. As to how investors broadly should think about moves like this after a report like we got. What do you think?
I agree with the point that Rob made, where we're in a situation now where there's just no room for even the slightest disappointment. And that corrects itself through price. And now maybe there's a little bit more room. But you certainly don't want to see Microsoft have another quarter where they don't quite hit Wall Street's expectation. So you got a 90-day, I think you're in the cooler for 90 days long the stock, which is perfectly fine. And if you've been in it for years, you've made a lot of money and you could afford that. New traders who came into it buying ahead of the print are pissed off, but I think they didn't recognize we are in this environment where even a narrow miss gets punished as though it's the end of the world. That's a reflection of where valuations have been. It's also a reflection of a lot of the fear around things like, can OpenAI pay its bills? I don't think that's going to change, quite frankly. I think throughout the balance of the year, that remains where the landmines are. But I think there's a bigger point here that's more important for everybody, whether they're long Microsoft or not. This is a really healthy market environment where the Mag 7 are not trading as a monolithic thing, and you've got massive separation. I want to share a stat with you from my team. Microsoft down 12%, while Meta up 8%. That is a 20% spread. If they close here, it would be the second largest daily spread between those two stocks since Meta came public. And the only greater spread was on a day in 2013 where Meta was up 30% on the session, with Microsoft down 1%. So we really have never seen an earnings season where these two names have diverged to the degree that they are. And I think this flies in the face of the people who have been complaining about, oh, it's about index funds, it's ETFs, there's no price discovery, the market's being manipulated by Vanguard and BlackRock and the flows. No, actually, people are making rational buy and sell decisions on results. And we'll do Meta in a second. Yeah. As narrow as Microsoft's miss was, and let's face it was pretty narrow, Meta was not like a blockbuster
and they all came into this week down for the year.
Yes.
So results matter.
Well, that's right. So wait.
Microsoft was up 7% since last Friday.
But this is the takeaway for me, though. That's good news. It doesn't take much of a beat to get an outsized reaction like we're seeing in the for Meta to the upside. Doesn't take much in either direction, which is good for investing, I think.
So yes, the stocks, to your point, Rob, were still down on the year, which is obviously very young. However, over the last week, they were all up. They were all running into the print. Now, Josh says that Microsoft's going to be, his words, in the cooler for 90 days. Microsoft is last quarter's Meta. Because if you look at the drop in Meta last quarter, it looks exactly like that. Because there were the same questions. 100%. You're spending like crazy, and we're not convinced.
Meta guided higher on spending too.
We're not convinced that you're going to see the ROI fast enough to justify what you're spending. This time around, however, is different. Yes, they showed a big pickup in spend, bigger than expected. They showed a bigger than expected pickup in revenue growth too. And that is the story. That is why that chart looks like that after looking at the far left like it did last quarter. They seem to be answering some of the most serious questions about what is happening there. Rob, you own this name too. It really is. Like Microsoft was Meta last quarter. Meta seems to have answered the call, so to speak.
Different to where they are in the hierarchy of monetizing AI, though. If I look at Google and Meta, which are our largest overweights of the Mag 7, versus any of the other Mag 7, they are really at the front lines of using advertising and marketing to see an enormous, if you looked at the Meta numbers, there was an enormous pickup in adoption, right? So if you're able to monetize quickly, which is really where it resides, you will have the ability to have an earnings report that looks like you're healthy.
Well, Meta's revenue is 97% advertising.
Correct.
So it's very different from Microsoft.
Totally.
Right.
But when you think about the progression of who's been monetizing it the fastest, Meta has seen rapid acceleration there. Google Alphabet has seen massive acceleration there. Some of the others are not seeing it. It gets back to your original question, is can the spend be justified? And it is there.
So Bernstein comments on Meta, says,
9 upgrades.
All the core does is win, win, win no matter what. They raise their target to $900. They were at $870, so they were already really bullish. But they go to $900. They reiterate their outperform rating. Jimmy, what did you want to say earlier? When you look at this, the difference of what these companies are doing, it's so striking that Meta was, last quarter's egg all over the suit stock, and here it's Microsoft this time.
So we're obviously seeing, and we've talked about for quite some time, that this is not the monolith, the Mag 7, that it was. And I think, Josh, that's what you were saying. I just wanted to extend it one step further, which is to say, the market overall is not getting killed by this. Yes, the NASDAQ is down big. But many of us, I think all of us have wondered over the last year or two how this concentration at the top of the S&P 500 would resolve itself. And there's been a worry that Microsoft down 12% would create a cratering effect for the rest of the market and bring it down. The RSP, the equal weight S&P 500, is flat. Small caps are down only 0.3%. And it's showing, to use your word, a healthiness in the market, that we can have this correction in the concentration without an absolute bloodbath. I think this is healthy, honestly.
I think the points have been made, and the stocks have proven this out more recently than over the longer period, that there are idiosyncratic things that are going to be punished.
Well, look, Meta is a user of AI to improve its algorithm so that it keeps you addicted to Instagram longer. Microsoft is selling other companies the ability to utilize AI in their cloud environment. So right off the bat, these are not comparable, other than the fact that we've all decided, they're hyperscalers, or they're in the Mag 7 or the Grade 8 or whatever we're calling it these days. But like every one of these names has its own cons, pros, different drivers. Like, is there really a lot of similarity between Meta and Microsoft in real life, other than size and scale? Not much. And I think that this bears that idea out. The thing that's interesting about Meta, though, 2026 is still an important year for them to actually deliver on the model front, because they've spent too much money not to. And so they've made this big investment in Scale AI. They brought on Alexander Wang. They're talking about like the next generation of language models, et cetera, et cetera. They do at some point have to be able to show yes, $135 billion in CapEx this year, but we have a new product that's revenue generating in and of itself, and it's not just, hey, look, cooler Instagram. So they have to do it at some point this year.
We do have a problem in software. I mean, quite obviously. And Microsoft is making it worse. Undoubtedly today, the IGV, that is the software ETF, and we show it to you a lot. Let's take a look at that instead of that. Worst day since April 4th of 2025. And it's not just Microsoft. You've got ServiceNow, Malcolm, which is down after its report. They did raise their guidance, but this one and CRM, Salesforce, have been really in the eye of the storm, where conversations are taking place about AI allegedly, quote unquote, killing software. And I don't know what reverses that. The commentary on Now was good, but not good enough. And that is the overriding factor in all of this. Good report, okay, fine. Not good enough, not now, not with these questions being asked.
I picked the wrong day to be here, obviously.
Well, we need your insight, so it's the right day.
So I jumped into ServiceNow down 30% over 3 months or something, and I said out of my mouth on this show, this represents peak pessimism to me. I thought that the sell-off following the Armis deal announcement was probably as bad as it got. I thought it was also overblown because I can see where Armis would be accretive. And now we're down another 12 or so percent, depending on where there it is, 11% right now. So it doesn't look great. However, I will say Bill McDermott did everything he could. He directly addressed, we're done making acquisitions for the foreseeable future. I am done with M&A right now, and please give us back our market cap. And the street did not care. And so I think that it has a lot more to do with sentiment related to them trying to acquire their way into being a AI competitor versus growing it organically. And I think eventually a narrative has to change to
I don't think there's anything different that they could have done. The stock would probably look the same. Oracle is in a 50% drawdown. So much for all the bubble talk. Hard to have a bubble when Oracle's cut in half.
Look at CRM.
CRM's in a 42% drawdown. It's a worst drawdown since 2022, and that's with activists re-engaging. Doesn't matter.
Broaden that out. You can see a straight line of nothing. I think if you back it out for a year, look at a one-year chart.
That is a slope we've skied, by the way. I mean, it's a core business. There's high switching costs.
Well, you came down that slope doing the downhill, and your helmet's all, and your skis are all over the place.
I don't know if it was a total.
You're in the netting on the side.
I don't know if it was a total yard sale like that, but I got to tell you, we've experienced it. We haven't lost faith in it. We probably should have a while ago. But the reality of it is it's core to our ecosystem and everything we do. It's core to a lot of ecosystems out there. There's enormous switching costs. And if you're thinking about a hedge to the new way of doing things, those hedges generally are in the form of price and businesses that are important. And by the way, if the narrative pivots, these are going to be benefits that benefit. In addition, Scott, just one more quick thing.
I want to mention another stock.
They are trying to embrace AI. We're seeing it through our ecosystem. It's not as effective yet. There's some tip of the spear companies like Google and Meta, but there's others that are going to take a little longer.
I want to show you IBM today too. And let's just look at the intraday for a moment. So there's the 6% move today, which is dramatic in and of itself. But pull this back out to, let's try 5 years. Let's do 5 years. Because this, to me, more than so many other names, is we will show you. We will show you. After doing nothing in 22, doing nothing in 23, they're like, we got this. We know how to integrate Red Hat. We know how to do AI better than most. And the street, I don't think, was sold on that until the last few years when that move, credit to Stephanie Link, who's been in this name for a long time, Rob, Malcolm, now you feel better, Malcolm, blowing you up a little bit on this one. But, man, they've delivered. They've delivered. What do you guys say about this?
I got to tell you, we added it on the show last year because we thought it was a cheap way to get this exposure. And by the way, it really was. And it's up, I think, 47% since we've talked about it. The PE's obviously expanded, but it's another company that is not being disrupted as much by AI. They're embracing it and well-positioned to benefit from it. It's starting to be reflected in their numbers. And we think today it justifies the valuation. Their conservative guidance is not too surprising. That seems to be a little bit of their history, right, in the way they do things. But they've pretty consistently been delivering.
Didn't they go through quarter after quarter after quarter after quarter of no revenue growth, disappointing at the very least? And that's why the stock looked like that for a few years. And then Arvind Krishna, the CEO, has just done, I don't think you can say anything less than a masterful job. But if people don't talk about him as much as they, try and blow up some of these other CEOs, but you better put him on your wall of fame, given what the stock has done.
What I thought was attractive about this one when I jumped into it, their AI book at that point was about $2 billion. And it made sense to me that as we were getting excited talking about all the hyperscalers spending all this money to build out data centers and everything else to run AI, you needed someone to come alongside you as an enterprise and teach you how to actually use the thing that you were deploying within your company. And so that, to me, was where it made sense for IBM to come into the picture. Fast forward, they jumped from $7.5 billion in the AI book to about $9.5 billion previous quarter. 12 and change this last one they just reported. So they're more than double from last year where their AI book of business was. That, to me, is where the growth story is in IBM.
All right, I'll come back to this in a moment. We have breaking news down in Washington on the Hill. Emily Wilkins has that for us. Em, tell us more.
Hey, Scott. Well, the Senate has now failed to advance a measure that would keep a good chunk of the government funded after Friday at midnight. But we do know that there is a plan B in the works. We know that Senate Democrats have been meeting with Trump's White House to try to figure out a path forward. We've heard one potential thing to do might be to move there. Remember, there are 6 funding bills in this package. Move the 5 with strong bipartisan support, and then just do a very short-term bill that would just fund the DHS, maybe for only a couple weeks, while lawmakers tried to work out longer-term reforms. Now, that's not official at this point, but we do know that discussions and negotiations are ongoing. Of course, timer's ticking down at this point. You've got less than 48 hours until we would officially be in a shutdown. There is hope that if we're in a shutdown position over the weekend, that it would be very short-lived. But of course, that's going to require the White House and Democrats to get on the same page. And while there's some optimism around that, we haven't seen a deal yet. Scott?
All right. Emily, thank you. Emily Wilkins, clock ticking, clearly. We do have more breaking news. Eamon Javers has that for us also from Washington. Eamon?
Scott, that's right. President Trump is having a cabinet meeting right now, and just moments ago, he gave us a new window into his thinking on Fed share. The president said he'll announce a new Fed share next week sometime. He didn't put a precise date on that. We don't have any indication of anybody he's favoring or not favoring, but the president said a short time ago that he'll be announcing the head of the Fed, who will be a person that I think will do a good job. That doesn't give us much to work with, Scott, in terms of who are the remaining 4 candidates he might be thinking of. But it looks like that deadline, which had initially been set as sort of January sometime, is now looking like it's going to be February sometime.
All right. Well, we'll see. Reeder, Waller, Hassett, and Warsh. And we'll see who gets the lucky golden ticket.
Final 4.
Eamon, yeah. Eamon, thanks. That's Eamon Javers. All right. Let's turn our attention before we get out of here for this break to Apple, because that is the biggie tonight. How about this? J.P. Morgan's Retail Radar. Retail investors turn the most positive on Apple for the first time in 3 months. That's interesting, considering the stock has been, I think, in an 8-week-in-a-row drawdown, which has been painful to watch. Steve Kovac is always in Cupertino on this big day, and he is yet again. What do we need to watch out for most of all, Steve?
Hey there, Scott. Yeah, most of all, first of all, we know it's going to be a blockbuster quarter for that iPhone business, the iPhone 17, double-digit top-line revenue growth that's going to contribute to that. It's been a really long time since we've seen that kind of growth come out of Apple, especially in that super important December quarter. And then we turn our focus over to AI now that we know the iPhone picture and that new partnership with Google's Gemini service that is going to be moving forward, powering a lot of the Apple Intelligence features features, including that delayed version of Siri that's been delayed at least a year now, that's going to be launching, we expect, within a few weeks. So hopefully some more details on that. You guys have been talking so much on the show so far about monetizing AI. That is still unclear how that works over here at Apple, because they're going to be giving the system away for free. Apple Intelligence comes included in your new phones. So at the end of the day, whatever comes out of this new Gemini relationship is going to have to move new phone sales, just like we thought was going to happen last year. And then finally, on the tariff front, we are expecting or Apple said to expect at least a $1.4 billion tariff bill. That's on top of the several billion they've already paid so far. No SCOTUS decision yet. That's going to really impact that. And then also, just one more thing to look at is these memory prices. We've been talking, Samsung reported last night how memory prices are going through the roof. We're watching SanDisk earnings and so many others. There have been some consternation on the street lately about how that might press Apple margins. So we'll be paying attention to that too, Scott.
Yeah, I mean, someone's pain has been Micron's gain. That's for sure, because that stock's been ripping too. All right, Steve, we'll see you later. Thank you. Steve Kovac, Cupertino, as always. You want to comment on this one for us?
Yeah, I think the thing with Apple is last year's problem is this year's benefit. So last year, Apple's under pressure. What's their AI strategy? And by the way, I'm not making fun of everyone. I was saying the same thing over and over again, and I'm a shareholder. But like, that was the story last year. What's wrong with Apple? Why can't they do this? Okay. Fast forward a year later, and now all of the spending they did not engage in looks like sort of wise. And let's not forget, in the end, they are the gateway for every one of these AI apps and products and services. They're getting paid on anyone that wants to work with consumers via the iOS ecosystem. They're sitting there like the world's gatekeeper to the wealthiest consumers all over the world, and that hasn't changed. And some of the pressure's off. They're going to work with Google. It's a partner they've worked with for 20 years. And quite frankly, I don't know when the Siri upgrade will come. The street doesn't seem to be as worried about that. They got an iPhone sales cycle. They got record services sales, record margins on the services business. And whenever they get around to figuring out their own internal AI strategy, at this point, it looks like it'll be good enough for everyone.
What do you think?
I'm taking what he's saying a little further, all right? It is a great company. You often hear us on this show.
You're really
talking,
going out on that.
No,
Apple?
just hang on, just because we don't have much time.
How long did you think about working that one up?
Okay, you guys are hilarious.
How many donuts on the tractor in the snow? How many did it take you to come up with that?
For those people who don't own Apple, just consider this, all right? And if we could put up a 20-year logarithmic chart, that might ask too much. But I'm telling you, this stock goes up over time. It's a great company. You hold it over long periods of time, and you don't worry about, hey, it's 34 times and it has to come down to 29 times earnings. That's irrelevant. The 20-year annualized stock return is 27%. Annualized over the last 20 years, the S&P 500 is 11%. I see no reason that doesn't continue, given what you were just saying about it, Josh.
20 years?
20 years.
Did you consume another Red Bull before the show?
I did not. I only had one espresso because last time I thought maybe the Red Bull went
cut
too
that
far.
back to a decaf.
But here's what it comes down to. iPhone
Real quick,
sales
I got to bounce.
iPhone sales have been stronger than we expected them to the last 4 quarters, and that's kept the Apple story alive. That's really what
it is. A premium valuation relative to the growth rate.
I gotta go.
We're going to have to leave it there, Rob.
Josh has a move. We want to tell you about that, and we got to pay some bills in the interim. So we'll come back.
Hey, everybody. Welcome to Blue Cloud Trading. I'm George. It is Thursday, January 29th, and it's actually 2:36 p.m. Eastern Time. The market is still ongoing here, and I'm going to be coming out with a second video later today. There was actually one earlier this morning as well with Tom Lee. He was on Worldwide Exchange. It was another CNBC show this morning. You may want to catch that video. But let's look at the markets right now. What's happening? The Dow is currently down 0.04%. Nasdaq down 1.37%. You can see the big drop here. But since 11 a.m., it started to recover a bit. It's a little upward channel here since 11 a.m. S&P 500 did the same thing, down 0.54%, down 0.56, and it's still moving upwards. Going into the close. The Russell 2000 is only down 0.17%. Let's take a look at I'm going to be doing another video later too. So we'll do a better update, I think, a little later. But right now, what I want to do is go over the stocks that they talked about on the halftime report. Up until this point, we're going to see the second part in the second video, like I said. So let's look at the SPY ETF right now and see where it's currently at. And here it is on the daily chart. You can see it is still holding under that 696.09 level. Has been unsuccessful in breaking through. Like I said, that's a really important critical level that it needs to break through. Has not done that yet. So we'll keep watching. Here's the QQQ ETF. This one's pulled back after reaching that 637.01 level yesterday, right? What's interesting is the fact that, as I mentioned before, that 637.01 is based on that prior candle going back to October 29th of 2025. It reached that level, it dropped, came back up, stayed under it. It's retested it yesterday on Wednesday, and here we are today, dropping down 1.15%. Now, the good news is, even though the Qs have pulled back and they were actually under the moving averages here, the Tenkan and Kijun for a short period of time, the buying started happening, like I said, right? So if we look at a 5-minute chart, you can see, like I said earlier, around 11 a.m., the buying started happening, and it's been up 1.18% since 11 a.m. I don't know if this is going to be a long, it's going to be an extended situation, but it's holding up, and that's the key thing. FEZ is the Eurostox 50 ETF. Did something similar. As you can see, dropped under the Tenkan briefly, and it's being bought up again. Here's the 5-minute chart on FEZ. Same situation, right? Broke back above the 9 period, and then it started moving up. So overall, still strong uptrend. The rest of these, how about the Dow? Dow Jones is struggling right at the Tenkan. It's trying to recover and get back above there. It's still right under it. Russell 2000 has been for 1, 2, 3, 4, 5 days now under the 9 period, that green line, and we'll see if we can maybe get a bounce here. But the last since it looks like since 11 a.m., it's moved up approximately 1.28%. All right. And then the VIX is spiking a little, up 5.14%. It actually got up to this level, up to around 19.7 before it dropped down to 17.19. So that's a good sign. It's like a shooting star type candle. But the directional movement index is concerning. We don't want the VIX, the market volatility, to actually start increasing here. And this is giving me some warning signs that we might see that happening for a little bit longer than we'd expect. Let's take a look at some of the stocks they talked about on the show, like Tesla, for example, which is down 3.10% today. Um, and here's the weekly chart under the moving averages on the daily chart. Like I said, it's been finding resistance right at the cloud itself. See that? How it came up to it and got rejected a second time and a third time, and now broke through. And it's dropping further. And the directional movement index down below, which shows us the strength of the trend. You see the ADX moving up while the negative DI is moving up and green line is moving down. That's very negative. So it looks like it might potentially drop under this low here, the low of 417.44. Right now it's slightly above, but if it does, that's going to be really bad news for Tesla because the next level of support will probably be around 381, another 9.5%. Apple on the daily chart, up 0.64%. They're coming out with their earnings announcement after the close, so after 4 p.m. So it's hard to tell exactly what's going to happen here. We had a little bit of a bounce at the $244 level. You can see that right there. But the reality of the situation is that we've been experiencing lower highs and lower lows, right? So you can see it's been stair-stepping its way down, but it has recovered slightly right here. I don't know if this is really going to turn into anything. If you look here, we have not broken this trend line either. So yeah, we have to wait and see until after the earnings announcement. But right now, we are still technically in a downtrend. Meta had a big bounce jump after the earnings announcement yesterday, right after hours, and you can see what happened. Actually, what's interesting, and this is the best part, I love to see that my levels are working and they show significance, right? That they are actually um, quite predictive as far as where we might see price sometimes reach. Now, watch this. Do you see that level? Okay. We talked about this shooting star. This occurred back on December 12th, okay, 2025, that big spike up there. And then what I did was I drew a trend after I drew a trend line recently on January 22nd. You can see that right there in the little box. So that was created on January 22nd. And I said we need to get above that level for Meta to start showing some strength. What I didn't expect after the earnings announcement is that it would gap up. It would gap up to this level here, move up a little bit more, and then drop all the way down to that 711 exactly, right? Do you see that? So interesting, right? To the 711 level. And then what happened? It started getting bought up. So because it was so extended up to this point, I think a lot of people took some profits. But then once it came down to a more reasonable level, the 711 level, which was a support level based on that prior high, it started getting bought up. Can we see that on a shorter time frame? Let's look at the 5 minute. So there's that same line, that 711 level. And so look at it. So there's the gap up. That's the dotted green line, shows the opening price today. It dropped, came down to the 711, got back above the Tenkan, and started riding it. And so how far has it moved up? 3% since that time frame, which was around 10:45 a.m. So Meta is starting to show some strength again. It's up 9.93% currently, but it's still technically under the opening price. You see that dotted green line? So that's something to be concerned about as well. Because if you look at the daily chart, this is not a really super bullish candle. All right. So we'll see. We'll see what happens with that. Microsoft. Let me show you what the weekly looks like. Also, guys, here's the weekly chart. By the way, the reason it doesn't have a flag yet is because the Tenkan on the weekly chart is still under the Kijun. And if you notice over here, the Chiku span is still has not gotten above the candles. That's the white line there. That's the current price right there, projected 26 periods ago. That's the white line that you see right there in a line form. What we want with the Ichimoku indicators for that white line to be above the candles, and it's not there yet. We also want the green line to be above the red line, which it's not. Everything else looks pretty good. Microsoft had a big drop after the earnings yesterday, right? It had a big drop, down 12.09%. This is a weekly chart, so it's under the cloud now on the weekly. And here's the daily chart. So going into earnings, we talked about how it was finding resistance at the 200. It was finding resistance at the cloud. We had a lower low. It was still in a downward, you know, in a decline here, had not taken out any prior highs, and boom, it just dropped, and it's still dropping. So since the opening price here, if we measure from right there, the opening price, it's dropped another 3.8% throughout the day. Interesting. Okay. And then we've got Netflix, which it's interesting because Netflix is still holding up above 82.11. That level, whoops, what's it based on? Well, we have to go back again, back in time. Do you see this prior low down here? Okay. So that low right there, if you look, $82.11. Okay, Monday, April 7th, 2025. Yes, I go back that far to find support levels. And of course, because it's a weekly level, I can see it a little bit more clearly here in the weekly chart. All right. So you can see right there, okay, and right there, it was finding support. Let me just show you guys. So there we have it right there. Right there, it found support and expanded to the upside, expanded to the upside again. Now it's retesting. It's still above it. Look at this. The price right now is 82.90. We're just so close to that at 82.11. What will happen? Well, personally, I'd wait until tomorrow because this is a weekly candle that's still forming. It's still in it's dynamic. It has not formed quite yet. We do need to wait for this candle to actually get closer to the uh, closing price tomorrow on Friday. I would wait until 3:30 p.m. You'll have an answer around that time, 3 p.m., 3:30, and it will either be bouncing off 82.11 tomorrow, or it will be breaking under it, most likely. You could certainly just keep on just staying, creating a base here before it makes a new direction call. So, but it's holding up. So something to look to consider. If you still have a position, I mean, I would hold it as long as it remains above that 82.11 and continues to close above it, not just piercing it, right? It needs to close above it each time. So, and what else, guys? That's going to do it for this video because I will be coming out with another video. If you guys are not familiar with my channel, because there's always new people coming to this channel. By the way, check these really negative news. U.S. trade deficit widens by the most in nearly 34 years in November. That's not good. This is from Reuters. Okay. The U.S. trade deficit widened by the most in nearly 34 years in November amid a surge in capital goods imports, likely driven by an artificial intelligence investment boom, which could prompt economists to trim their economic growth estimates for the fourth quarter. So here you can see the trade gap increased 94.6% to 56.8 billion. The Commerce Department Bureau of Economic Analysis and Census Bureau said on Thursday the percentage change was the largest since March of 1992. Economists polled by Reuters had forecast the trade deficit would rise to just 40.5 billion. Well, it's 56.8. Anyway, and okay, getting back to this, right? About my channel, Blue Cloud Trading. Subscribe if you haven't yet. Hit the notification bell if you want to get these timely notifications about what's going on in the markets. It's very time sensitive. I strongly suggest that you subscribe, hit the notification bell. It's free, absolutely free to do that. And then you can find me. Once you've hit the notification bell, see how it says 9+ notifications right there? You just click every time you go into YouTube, click on the notification bell to check to see if a new video has popped up. And if you want to get access to the member-only videos, okay, like this video here, actually not that video, these videos, sorry, the ones down below here. There's the recent one that I just did 4 hours ago, Tom Lee of Fundstrat, okay, talking about metals. You might want to check that one out. And I will be covering metals in the next video too, so you might want to definitely check that video out. But okay, here's the members-only videos, all right? I go over my entire portfolio, and you click the join button. There's 3 different levels. You have to become either a Blue Cloud Trader or Blue Cloud Legend level member to get access to those videos. Under Blue Cloud Legend level membership, you also get daily updates on the trades that I'm placing, and I share that with Legend level members. And you find that under posts. Next to the post, once you become a member, it will look like this. You'll see membership tab. You click there, and that's how you can access the trade updates. And guys, stay tuned for the next video. It's going to be coming out soon. I'll catch you all in the next one. Consider also becoming a Blue Cloud supporter member because you will get the videos slightly faster than you would ordinarily. As we have a new feature here where basically early access to the videos. Okay, so consider that. Okay, talk to you later.